So, we talk about the S&P a lot, but for the Dow Jones, right? The Dow
Mhm.
Jones peaked at around 45,000 and is hovering around like 41.6 now.
Yeah.
So as far as like prices where people should start to look at entry points and as using the Dow Jones as an indicator to really, look at the market, what is the price as far as the Dow Jones is concerned?
Yeah. And the first thing I want to say, I know we've had a drop that was pretty damn scary. Even in our Telegram, a couple people hit me like, damn, I didn't join for all this doom and gloom. It's not doom and gloom. I'm just making you aware of where we are in terms of the cycle because it's actually a great buying opportunity. So if you're looking at the Dow, 40,244 is the area I would be looking to buy. So $40,244 is the area I will be looking to buy the Dow. And for all of you who like SPOG, any of the cheaper SPY or Dow equivalents, that's fine as well. But the Dow should go up. And the biggest thing I want to stress over what's happened over the last maybe 3 or 4 weeks is that you have to focus on where to buy based on asymmetry. So meaning you don't want to buy the high. So if we're at the high is 45,000, I don't want to buy 44,950. I want to wait until it drops into a price point where everyone else is panicking. People are panicking. Also, once again, you can use the fear and greed index
Mhm.
to gauge where we are. So when we are in extreme fear, that's the time you can look to buy. Or if the VIX gets above a certain level, you can look to buy them. But 40,244 is where I like to buy the Dow. And another important lesson in the United States stock market, whenever we've had a correction or a crash, we have recovered 100% of the time. Now, whether it's through financial engineering or quantitative easing, that's another conversation for another day. But America has one of the only markets that recovers 100% of the time. Japan, China, different instances. But our market for every crash or correction has recovered, usually within 8 months. In modern times, the longest time, but 2020, it was a matter of weeks. We were back to record territory. So don't worry, buy at the right time, and you'll be a-okay.
Yeah. And if you're buying the Dow from the Spider Fund DIA, that sounds pretty consistent. If you look at the support level, first, second
For
level of
sure.
support is around 410 and 409 average. And then
Yeah.
that resistance starts to hit around 417, 419. So that's not, if you correlate that to the actual Dow Jones 41,000, it's probably right in line with what you're saying as well.
Yeah.
And I think it's important to highlight this because there are some probably new listeners for the first time, maybe. Stocks always recover, but
Yeah.
every single stock doesn't always recover.
Great
So
point. Yes.
that's why it's important to, once again, the safest route is an index fund. That's why when he says two tech, two index, right? Like an index fund, now you're invested in the entire stock market, whether it's VOO or S&P 500. Now, S&P 500 is 500 companies, but it's still kind of like a microcosm of the entire stock market. Or
Yeah.
an ETF, which allows you to have broad range exposure in one area. Like QQQ gives you all of the technology companies, right? So that's safer.
Yeah.
It's always safer because, yeah, the stock market always goes up, but individual stocks do not always go up. Some stocks have been down for 10 years.
Marijuana
So
stocks. Tilray.
Yeah,
Sorry.
we're going on
Finito.
5 now.
yeah, so just because you think you're putting your money into a stock and your
Yeah.
theory is that, okay, it's down, but I'm not gonna worry about it because stocks always go up, that doesn't mean that your particular stock is always gonna go up.
Yeah, and that's why we talk indexes, and then the next thing would be the ETFs, because it might just be a sector that's moving. So for the past 5 years, we've seen that technology and specifically semiconductors have led that charge inside of technology. So you get
Yeah.
an ETF inside there. So whether it's a SMH or it's a SOX, which tracks those and they move according to how those are performing, right? So NVIDIA is going to be leading at SMH. That makes sense because of where NVIDIA is at. You can watch as those movements are being made inside of the ETF, that might be companies that you should be looking at because they're moving, right? They have actually shown growth. Whereas a sector, I don't know, consumer discretionary or XLY would be another ETF where it's like, wait,
For
this
sure.
hasn't moved the same way as an XLK because of the technology stocks that are inside of there. So always good to look at it on a large scale than in a macro scale. Okay, the market is moving, right? The Dow, the S&P is moving. Well, what is moving it? And then you can fine tune it.
For sure. And I've been very critical of Google, but this weekend I was playing with some of the AI tools.
We appreciate it.
Got to give you credit, Claude. That new update. Sam Altman. I don't know who, like when Fat Joe found Pun's rhyme book. Sam Altman, you better go find that AI code and do some vibe coding. Google.
Yeah.
Well played. Fight back. I'm proud of you.
Good old Sam.